Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that Omicron impact on the soon-to-be-released US non-farm payrolls report is scaring the bejesus out of the wider global financial markets today. Risk is off until the dust settles on this data when it's released tomorrow. US jobless claims came in without any special jobs effect, however. Last week there were 257,000 initial claims and slightly lower than expected. The total number of people on these claims went up slightly, however, to 2.04 million, which means fewer came off these registers. Still, the overall level remains lower than pre-pandemic. And the US service sector PMI slipped, but not by as much as you might expect and not by as much as analysts had expected. New order levels held up, price pressures eased somewhat, but the employment subcategory isn't expanding as fast as previously. Despite the overall small pullback, the extended expansion remains historically strong. And a Canadian banking regulator is warning that some house prices there could fall as much as 20% after their current speculative bubble bursts. South Korea's factory expansion improved in January, although it remains modest. Japan's factory sector contracted slightly, and India's factory sector expanded slower in January. In Europe, both the European Central Bank and the Bank of England met market expectations with their policy reviews overnight, with the Bank of England raising rates 25 basis points to 0.5%, a back-to-back increase, and the ECB keeping policy unchanged. However, both meetings unveiled substantial hawkish shifts. The British are reducing their money printing, and the ECB is saying the situation has changed, setting up conditions for tapering there soon too. One reason is that producer price inflation isn't easing in the EU. The latest data for January shows it rising to an eye-watering 26% from a year ago, up 2.9% from the prior month, an acceleration from 1.9% in November from October. In the world of sea shipping, container rates slipped marginally last week, mainly because rates out of China fell. But bulk cargo rates fell too for the same reason. Demand out of China is down. The US Treasury 10-year yield opens today at 1.83% and up 8 basis points. And the price of gold starts today at $1,806 an ounce and down $3 from this time yesterday. And oil prices start today up by nearly $1 from yesterday at just under $88 a barrel in the US, while the international Brent price is now just over $89.50 a barrel. And the Kiwi dollar will open today little changed at 66.3 US cents. Against the Australian dollar, we're also little changed at our lower level of 93 Australian cents, and against the euro, we're marginally firmer at 58.7 euro cents. That means our trade-weighted index starts today at 70.9 and a small net rise. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.